So this is the trade I did from the video. It's on this. I'm recording my phone screen, so it's a little cloudy. But you can see here, we had this big red day. This big red day. So that's actually called a bearish engulfing candle, or a 3. So it opened up higher, went higher, then closed lower than the previous candle. So it broke the high and the low of the previous candle. That's actually a bearish candle that signals follow through. It should be red coming soon, and the next day it actually went lower. It has good volume, it has more volume, and this happened, I think it was earnings. So that's the catalyst for it moving and doing all that value. But nonetheless, you can trade what we see here. So if you were to come here, one of the ways to trade this is to take a retracement zone off of it. You don't want to just short it just because it's a bearish candle, because as you can see, it was up 7% today. So if you just get the high and the low of yesterday's candle, you can see that it almost forms a perfect, that green line is a perfect 50% retracement of that zone, as you can see here. I don't know if you can see that. So now that we know that, we can almost get rid of that fib. And I'm gonna show you another hack. So let's remove that. Okay, remove that. If you go, I already got it drawn in, but I'll show you here. We extend it to the right, go to the properties, extend it to the right. And now if you come in and see those fibs, that comes from the high 974 up here down to the low of this candle. So we took one first just off that 1 day candle, and then the next fib we drew it from the high to the low of yesterday's candle and the previous day. And what you see is you get a confluence zone right here. If I go to a intraday chart, you should be able to see it a lot better. We right there. This green line is the 50% of that day, and it's the 618 of the entire range of the last 2 days. So that's a good guideline and catalyst. We want to see, can price stay above here, or does it kind of filter out and get back below? Both will give us signals. If we manage to stay above the 50% and the 618 level of that bearish engulfing candle, then that means it's more than likely going to run back to the top, which is 974, and potentially break and go higher to over 1,000. And if it doesn't, it has the potential to collapse proportionate to the size of that move, which would be right here. And the range of that is $108. So if it does happen to collapse from right here, it can go out, collapse from right here, it can go all the way sub 820. So we're going to do a strangle. We're going to look for the options trades to go with a $1,000 call spread and an $850 put spread, and put that on so we make money regardless if the stock goes up or down. As long as it moves substantially within our guidelines and our ranges, we'll make a profit.